So this was the strategy I was talking about, the volatility expansion. So what we are looking for here is compressions like this on the sorry. So compressions like this Bollinger Band is getting here or here, or if we go back to the chart, we get it almost every day or every couple of days. um, we get these compressions. So there are two ways we can tell that these compressions are happening and when they're about to happen. So we can notice that there is the pivots are printed, and we can notice that the uh, Bollinger Band is printed. So let's say when we look at this compression, when the period of compression is happening, you can see the pivots are very nearer to each other. So the resistances and the supports are closer together because the price is compressed. So when something like that happens, we can expect a breakout, larger breakout. So in these scenarios, we initiate longer trades. Like uh, we expect there is going to be volatility on either direction, so we can trade the confluence strategy with different confluences, which I'll discuss in a few minutes. But if we, let's say, zoom out on these scenarios, what are the scenarios doing? So in this scenario, what is it doing? I think this is a major news, 6 p.m. on a Tuesday. I think this is CPI. So this is obviously we're not trading at that point. We should not be trading on such high news. But when the news is gone, if we have the opportunity still, then we might take it. Let's say, for example, uh, if we get the bottom prices in, or or any other things. But in this scenario, this is right at the 6 p.m. This is right at the CPI. I think this is 14th. So this might be certainly the CPI or something. But exactly at that point, we should not be trading. We should be waiting for the next few minutes, and only if the next 20 minutes or so, and only if the opportunity is still there. Like for example, in this case, it is not. We forget about it and we move on to something else. But let's say when we are compressed, we don't know we are compressed yet. So let's say this is expanding, 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 and at a certain point of expansion, so probably around this, it starts to compress. So this is only the starting of the compression. Let's say we mark it. When is the band exactly thinning? So if we look at it, it kind of starts thinning from these areas. So when it starts to decrease, compress, our only trades will be from bottom range is long and the top range is short, meaning we are shorting from this side, we are longing from this side only. So these shorts are not going to happen. This long, it has resistance very close. This long, it has very resistance very close. These longs resistance very close. We are not doing this. Even on the other side, these shorts, probably this short should be fine because it's still quite far away. But this short has a very, when it is triggering, it is almost at the middle point. We are not taking this. This is triggering, we are almost on the middle. We're not taking this. So these are not going to be taken only with reasonable distance between the trigger. So this is the trigger, and this is like what, 794. The Bollinger Band midpoint is at 780. That's 15 pips. You're still fine. 15 pips is fine. But in the next scenario, if I think goes below 10 pips, is 89. This is 81. So this is below 10 pips. So we're not taking this. In this all these scenarios, we're not taking this. Again, only in this scenario coming to this. This is 81, and the Bollinger Band at that point was at 91, so around 10 pips. So we are taking this, and also because it's coming out from the bottom. Wait a minute. Sorry. Yeah, as I was saying, uh, there are a few tricks to it. Like looking at the pivot levels. So pivot levels getting closer is a sign of price getting compressed. The Bollinger Band compression is obviously the most obvious sign of compression. Like this is a big compression. That's why it's going hail mary during that data point, I think. But still, without even that, we have good trades ongoing. Uh, let's look at something else. So uh, this is again a environment that get got compressed very much, that we could not capitalize. Probably if we hung out for this is totally dependent on the trader. We might have got it, but signal wise, in this case, the market threw us off. We, we can't do much about it. We can obviously look for 15 minutes in this scenario, in certain scenarios, but 15 minutes in other scenarios will be too late. Like for example, here or here. So this is too late entry. We cannot be that late without entries uh, and still try to get profits. Again, this is a very good, nice compression. Price is very close. The difference between the two bands is less, like $10 or 10 pips or 12 pips. So this is the extreme form of compression. It doesn't get more compressed than this. Then we have the breakdown, and the breakdown is from 52 to 22. That's 30 pips inside what 140, 520. That's 3 hours, 30 minutes, or 4 hours max. We are out with 30 pips. So that's about it. And there will be periods like this. There will be periods like this. We cannot get uh, noised out like this. So that's why we are using Supertrend. Supertrend is not there just because we use it. It is there to help us avoid these things. Because in this case, if we remove the let's say Supertrend, if we remove the pivot, we the divergence is not there anyway. So if we remove this, the trend obviously is getting triggered here, and because it's breaking the mid boundary, and then we are going outside and then coming inside. So that will be a very confusing point for a trader, because it could suddenly go to there, it could suddenly go to there. That will create a lot of confusion in the trader's mind. It will not help him at all. So what Supertrend is doing is keeping us on the trade with a strict uh, area that if that is broken. So this is this is based on that 10 ATR length with 1.5 hectare. If we increase the factor, we'll stay on longer, stay on trade for longer. Let's say if we increase the factor to 2, it will also get a lot smoother on certain scenarios. But we will be a little late in our entries again. So while the 1.5 entry was here at 52, the 2 entry would be 50. So that's pips that's we are missing, which doesn't seem like much, but it covers the SL, it covers the cost, it covers also the point of entry. So this is the point of entry where we are breaking the midpoint, we are breaking the super trend, and we are getting closer to the lower boundary. But what we are not doing is we are not getting wicked out in these scenarios. We are not getting hesitant in these scenarios. We're not getting hesitant on all these green bars that you can see all along the way. And we are targeting uh, a good return on the pivot levels itself. So you can see we got to the pivot S5 at that low point, and then that is there. So S4 and S5 are there because of that, because we want to target, we want to know where our supports and resistances are for our exits. These are not deciding our entries, these are not our trigger point, these are not anything else other than target. So let's say we are buying from these areas. This area only acts as resistance, so acts as a resistance. But when we are selling and above the R4, this is not a support, this is not a support. It might be a support on the price action, it might be a support on anything else, but this is not to be considered a support level on the strategy. That was something that might have been miscommunicated on the confluence strategy. But in any case, uh, scenarios like this, when the expansions have happened, it can be very cross for a long period of time, which is hard. But now we are getting compressed. So the distance between the two boundaries are 38 and 95. So it's still 40 pips. So it's still there a lot to be compressed. If we get somewhere, get the lower boundary, let me draw something. So so if the Bollinger Band comes around something like this, uh, yeah, and this one something like this. So the midpoint would be something like this. So in this compression zone, in this compression area, uh, we can probably try to long. So if something like that happens, we can long or short. Sorry. So compression doesn't tell us the direction. So in this period, when something like this happens in the next, I don't know, 3 4 hours, then we get activated on a strategy. That then we are looking for longs and shorts that are happening. That on this super trend Fisher, super trend 1.5 factor, and we obviously can target a long-term trade like 3 4 hour trade in this period. Because of the compression is happening, we can target very good higher return and on our entries on either direction. But yeah, that's the idea. We want to be active in a zone like this. So in a zone like this, we want to be making short longs and shorts on either direction, because even if we get 2 3 signals in there, one of them is going to be a bigger winner for us than and give us that necessary trade we want. So now what can we do? So this is triggering, right? So this is triggering. If the current bar is triggering on the downside, we can take that because we are about the Bollinger Band. So midpoint, and we are falling. The Ponjaban is falling. We are still seeing the volume is good. We are getting into a very good compression. So this can give us a return around to the lowest levels. And if we also, the main factor is to look at the long-term objective as well. So which is if we can increase our time frame, we'll see that the price is still falling and we are getting just resisted at the AVWAP level at this point. And that's the thing, that's the idea we have to run behind. That's the how we want to trade, that's how we want to follow our logic. So this is the setup we have to uh, be following in finding trades in the short term to get good returns on that short term itself. Price can be crossed for these like currencies for a long period of time, but overall it will satisfy the return when we target scenarios, not trade everything that comes in front of us. So that's about it. I think it is a bit clear, but on a strategy guideline basis, I'll need more coverage. I'll need more time to explain everything.